So as she said, my name's Catherine Kirk, and what I'm here to talk to you about today, the formal name of it is financial literacy. I call it how to adult. Credit scores, credit cards, W-2s, 1099s, income taxes, things you are going to have some knowledge of in the real world that they don't cover in any of your classes, and I really do wish they did. Why should you bother listening to me? My grandfather, at the age of 3, his mother started keeping a ledger of every penny she spent on him for food, for his clothes, for his school supplies, and he had to go work outside of the home and bring her outside money to pay her back his entire life. It is hard to find a parent less supportive. He got drafted, served in World War II, and was able to go to college on the GI Bill. He knew that was the best opportunity he was going to get to change the hand he had been dealt and where he had started in life. After college, he came to Odessa with $200, a used car, one kid, a second one on the way, and the promise of a job. He started working at an accounting firm, became owner of that firm. Under his leadership, it was one of the top revenue-producing firms in the southwestern United States from right here in Odessa. When he retired, they had to hire 2 people to do the work he had been doing by himself as a 65-year-old man because he was so efficient. He and my grandmother traveled internationally multiple times per year until he passed away. He's been gone for 16 years. She still travels internationally several times a year, can afford to keep doing it for the next 20 years with no money worries because he turned himself into a multi-millionaire. Because he made the climb, because he put in the work. His kids all went to college. My mom got an accounting degree, paid to put my dad through med school. They didn't have to have any debt to do it, which means they were able to provide opportunities to my sisters and I. We're an RN, an accountant, and a teacher. None of us had to work while we were going to college. None of us had to borrow money because one family member made the climb. It is a multi-generational payoff. My son, who never met my grandfather, is better off because 4 generations ago, somebody put in hard work for their lifetime. If you want something, you can get it, but you've got to be willing to work for it, and you've got to work smart. What I'm talking to you about today are things that I've learned watching others. Some of them I've learned by screwing up myself. If you see somebody kick a table and stub their toe, don't go kick the same table. Walk around. There's no reason to repeat somebody else's mistake. There's no reason to repeat your own. I have 2 college degrees. I have my bachelor's and master's in accounting, 12 years of experience, and I'm a CPA. That's a certified public accountant. It's a licensing exam that's nationwide. It takes 4 different parts. Each part is 3 to 4 hours. And the pass rate of the bar exam to become an attorney is higher than the pass rate to become a CPA. And as she mentioned, I'm well paid because I'm well educated and I work hard. How many of you ever plan to borrow money from somebody for something? Car loan, house, credit card, something. If you're going to borrow money, interest rate is key. Interest is what you pay to use somebody else's money to buy something today. Here's an example. $237,000 home on a 30-year mortgage. At 4%, your loan payment is $1,130 per month. At 4.25%, that same house is $1,160 a month. It's a $30 difference every month for 30 years. That's over $12,000 that 0.25% made a difference. Your credit score is what controls what interest rate you got. How many of you have heard of credit scores or creditkarma.com commercials or something like that? A credit score, every single one of you has one today, whether you're using it or not. When you get your Social Security number, you get a baseline for existing credit score number. And then if you take care of it, if you do positive actions, it'll grow, it'll go up. If you have some missteps, it'll go down. If you've had missteps, you can fix them and bring it up. If you're up high, you can screw it up and bring it back down. It will keep moving your entire life. Susie's got a car loan. She's paid every payment on time for the last 2 years. Bob's got a credit card that's always maxed out, and he's missed 2 payments. They've been late. Joe has never borrowed any money, so nothing's late, but he's never paid anything either. If you were the bank, who would you rather loan your money to? To Susie. Susie would have the highest credit score of these 3 people. Joe would be in the middle as a neutral. Bob would have the lowest because he's had some mistakes. It's just a number that they use to rate how safe are you to lend money to? How well are you adulting and paying your bills on time? In addition to paying your bills on time, live within your world. Not your friends, not your families, not your siblings, your world. I have a client. He gets a new Lexus leased vehicle every other year. He wears all name brand clothes. He goes to golf resorts all over the country multiple weeks per year. But his accounting bill where I work, he's paying $200 a month because that's all he can afford because he is in debt to his eyeballs trying to live a life he can't afford to live. Our family takes big trips every year, where usually my grandmother would pay for a cruise or a hotel room. And if we paid the cost to get there, the trip was free after that point. When we were first married, first starting out, weren't making much money, I turned down some of those trips. I had to say, no, we don't have the money right now, and I don't want to put it on a credit card. I missed out on an Alaskan cruise because I couldn't afford the plane ticket, and that was my only cost to go. But it wasn't no forever. It was just no then. Now we go on the big family trips and 2 or 3 other trips that we pay for ourselves because we did things in our world. Live in your world. Don't try to keep up with somebody else because they might be my client and they're swimming in debt and they're going to drag you there with them. You can use a temporary loan to build credit very easily. Save up $250. Go down to a credit union and put that money in the bank to be a CD. It's a savings account for 6 months. And then tell them you want to borrow $250 for 6 months. They're going to make that loan because your money is sitting in their bank. It's zero risk to them. So then that money you took out, you pay back to the bank over the next 6 months to pay off that loan. And at the end of 6 months, the loan is paid in full. You get your money back. You earned some interest while the bank had your money. You paid a little bit of interest while you had the bank's money. But now at the end of 6 months, you went from Joe, who had never done anything, to Susie. You have a 6-month bank installment loan that's been paid back in full. Your credit score is higher. Your interest rate is lower. That means you can buy things for cheaper. Credit score, even if you don't use it today, you might need it in the future. We bought our first house. Day we're moving in is the day our washer and dryer decided to die. I was going into tax season where I work a lot of overtime hours and I have extra paychecks coming. Sears had a deal where you could get a washer dryer interest free if you could pay for it within 6 months. And I qualified for it because we had good credit scores. So we got the washer and dryer today. When I got my overtime checks, I paid it off, got it for 0% interest, same as cash, but I got time to pay for it because I had good credit. So even if you don't need it today, you might need it tomorrow. If you're borrowing money, be honest with any lender. If you've had an issue, if you've paid something late, if you've changed jobs, be upfront with them so that they can give you honest options for what's available. They're going to pull your credit. They're going to call your employer. They're going to look at your tax returns. They're going to find the lie if you start trying to be somebody you're not. And then they're going to close the door and you don't have any options left. You can get in trouble with debt and credit cards when life kicks you in the teeth. And I promise every one of you in this room, life is going to kick you in the teeth, and it is going to happen more than once. Last semester of my college degree, my husband gets laid off all of a sudden. He's the one that was supporting our bills. So there were times that semester where we had $10 in the checking account and we were putting groceries on a credit card because we didn't have anything in savings. It is not somewhere you want to be. It is stressful. It's depressing. It's demoralizing. You don't want to be there. Some of you may be in households where you've been there. It's not fun. If you get sick and all of a sudden you can't work, that can get you in a bind. If you don't have a budget, if you don't have any savings, something is going to hit you. Something is going to hit someone you care about. So plan ahead. Be ready for it, and then it won't be as big a deal when it happens. Ideally, stay out of trouble first. But if you've made a mistake, learn from it. Do better next time. Watch somebody else's mistake and let them pay that cost. And then you'll be much better off over your lifetime. If you don't have any debt today, you're ahead. Stay there. Get 1 or 2 credit cards. Keep your loan payments low. You can make a credit card pay you money. Apply for a credit card like the Quicksilver. What's in your wallet? You see the TV commercials. They give cash back, which means you can put your gas for your car on that card, pay it out of your checking account the next day, and you've earned cash back on a percentage of what you spent. So if you do that every month, you've got a paid in full credit card. So you're building your credit report and you're making money because that cash back can be used to pay your bill. It can come back to you in a check. You can bank it and cash it out at Christmas to go shopping and buy yourself a Christmas present. It's free money that you're leaving on the table if you're not using it. If you've got an issue with debt, know where you're at. Be honest with yourself. Lying to yourself only hurts yourself. There's no reason to do it. Make a list of who do you owe? How much do you owe them? What interest rate is it at? So you can start figuring out a way to get it paid off. If you're paying off debt, it's usually best to target the highest APR, or annual percentage rate. That's the highest interest expense. It's the most expensive debt. Paying it off first saves you the most money. Once a card is paid off, roll it on to others. If you're paying $300 a month for 2 cards, the first one gets paid off, pay $300 a month to the second card. You start snowballing uphill and you pay it off quicker. If you've got a card that you're not using and you know that you are prone to impulse buying, to seeing something and just buying it because you want it, literally freeze your cards. I know people that do this. They take their credit card, put it in a Ziploc with water in their freezer. It's still there. If they need it, they can get to it. But are you going to thaw a block of ice or ice pick it out just to go buy one thing online? Are you going to thaw it or ice pick it out just to go down to the store and buy an outfit? You have to be honest with yourself. If you know that you're going to spend it, if you have it, leave it at home. It's still on your credit. It's still showing you've got this paid in full good standing card because the bill due is $0 every month. Be honest with yourself and manage yourself. Like I said, I know people that do this. There is no shame in it at all. If that's what you need to do, then do it. If you only make the minimum payments, you're going to pay a lot more in interest, and it's going to take you a lot longer to pay off that debt. Any little extra amount adds up. $25 extra a month on a credit card saved you $126 in interest in 2 years. It doesn't seem like it's really big numbers, but you're young. How long do you plan on living? If you start doing little things like this for 10 years, for 30 years, for 60 years, for 80 years, it's going to add up to tens of thousands of dollars that stays in your pocket, not in somebody else's. You can transfer debt sometimes from a higher interest rate to a lower rate. It's called refinancing your debt. It makes it cheaper and faster to pay off because there's less interest being charged. Again, paying your bills on time so that you don't sink farther into debt is the best thing to do. You can check your own credit report. Like I said, all of you have a credit score today. This, for both teachers, is an extra credit opportunity that is better for you personally as well. You can go to this website. You can go to Credit Karma. You can go direct to the bureaus, which are Equifax, Experian, and TransUnion. And you can enter your information and say, show me my credit. It's free. It does not hurt your credit score. And you can look and make sure there's nothing on there that shouldn't be. I've had a client where their tax return was rejected because their 10-year-old child had a return filed under his name and social security number with the IRS. Identity theft happens all the time to kids and students because nobody's looking at your credit. If somebody has borrowed money in your name, you need to get that off of your report. It can take a long time. It can take several months to get cleaned up. And you don't want to find that when you're ready to buy a car. You don't want to find that when you're ready to buy your first house. Find it now, get it cleaned up, and keep an eye on it. And it'll pay off significantly in your future.
And like she said, if you show me or Miss Travis your credit report, we want to see a printed credit report. It's to benefit you. We're not going to keep it. We just want to, and we'll give you a bonus for it, but it's to help you. All right. This is something that really, believe it or not, like she just said, people will try to use your identity.
Sometimes
your
even
permission.
family members without your permission.
And think of everywhere your social security number's at. All of ECISD has it. Every doctor you've ever been to has it. If you have health insurance through your parents' work, that insurance company has it. Your parents' boss has it. It's all over the place, and it's not that hard to get to if somebody really wants to. Have a budget. Track your spending. Know what you're actually putting your money towards. Pull your receipts, your bank statement, your credit card statement for the last 30 days, and look, how much am I spending on gas? How much am I spending eating out? How much am I spending going to the movies? You need to know where you're at in order to plan appropriately. You can look for ways to cut back and sleep before you buy something big. If I'm shopping for new furniture or new television, some big out of the ordinary purchase, we go home and sleep on it before we buy it. It's still at the store the next day. It's still online the next day. But that way we can make sure that's really the one we want. That's really the best price to get it at. And we're ready to spend that much money. You can't always get it back once it's spent. But if we wake up the next morning and we want it, then we go get it. There's lots of options available if you or someone you know is in trouble with debt. But there are also lots of scams out there. So if someone's reaching out for help, be careful who you're talking to and make sure they're legitimate. Get a savings account. Like I said, I've gotten burned because we did not have a savings account. And it doesn't have to be huge. $10 a week is $520 at the end of the year. Easter weekend, we go to the movies. My son, who's 3, takes off running, falls, bangs his head into the wall, and splits his forehead open. The urgent care visit to derma bond it back together was $525. Doing something like this, you've got it in cash. You're not putting it on a credit card. You're not freaking about not being able to pay your car payment that month. You've got it in savings for when life kicks you in the teeth, or in this case, the forehead. What you don't see, you don't spend. If you work a job and they offer direct deposit, you can have that go to 2 different accounts. Have $10 go to a savings account, and the rest goes to your regular account. And you shop and pay your bills and live your life on this money, but there's $10 a month going over to that savings account every month that you never see. You never have to do anything. It's just appearing and growing and building interest. Even if it's $5 each paycheck, setting aside something you have to get started somewhere will make a big difference. Pay your bills first and have fun with what's left. I have a list of every bill that we owe and what day of the month it falls on. When I get my paycheck, all of the bills that are due before my next check get paid the same day I get paid. This does 2 things. If my car loan's due on the 20th and I pay it on the 15th, I save that 5 days worth of interest. If I do that on every monthly payment for the 5-year life of my car loan, I'm going to save several $100s. Also, it means my bills are paid and I know the money left is mine to do whatever I want. I can put it in savings. I can save it for a vacation upcoming. I can go to the grocery store, gas, out to eat, to the movies, whatever I want to do. If you wait and pay your bills as they're due, then you could have gone out to eat last night. You get up today, you've got an email that your cell phone bill's due, and you forgot about it. And now you're short, and now you've got a problem. If you paid that bill when you were first paid, you still could go out to eat. You just go somewhere a little cheaper, and everything's fine. Doing it in the right order pays your bills on time, builds your credit, makes it cheaper to get things that you want. You can get creative on your budget without doing anything fancy. If you're paying for internet, slow it down. The slowest internet today is much faster than what it was even 10 years ago. You'll live. Again, some of this I learned when my husband got laid off. We canceled cable. Now there's Hulu and Netflix and all kinds of streaming options available for very little. They don't have commercials, or they're even free if you've got other services already. Budget your cell phone. Pay for a lower data plan, and if you need to surf the web, go somewhere with free Wi-Fi. Make them pay for your cell phone data, not you. You can budget your groceries. A can of green beans is $1.48 solo. The bulk pack is more expensive, but frozen is significantly cheaper and healthier with less salt. I'm not saying spend 5 hours with a spreadsheet in Walmart. I'm saying your bread, your milk, your eggs, the things you use all the time, look at it periodically. Is there a different brand that you can't notice a taste difference, but it's $1 cheaper? We use 2 to 3 packages of green beans every week, and I've been married for 13 years. That's a few $100 for the exact same food. Utility options, your electric, your gas company, they don't have to tell you if there's a cheaper plan available for where you are. If you ask, they have to tell you. But they don't have to volunteer it. They want to get more money from you. You are the only one that has an interest in protecting your money. Everybody else wants it. You've got to defend it. How many of you have been in Best Buy and seen this offer? $1,200 TV, $200 off, $1,000, same as cash. It's a trap. Yes, Star Wars pun intended. You are actually signing up for a 27% interest rate credit card. This is the real legal rate. And they're only going to send you a bill with a minimum payment of $40 a month. $40 for 6 months is nowhere close to $1,000. And what they're doing from that day one for that first 6 months, they're running a calculation in the background of 27% interest on this TV. And if you still owe anything at the end of 6 months, all of that interest appears on your statement. And now it's a full-blown credit card like you had signed up for 27% from day one. If you pay just that minimum, which is what most people end up doing, you'll pay $1,480 for that TV. So they gave you a discount of $200, but they more than doubled it on the financing. And that's why they gave you the discount.
That's over 3 years.
Yes, and it's over 3 years that you spent paying for that television. I've done this. I've done this with a TV. I've done this with appliances. I've done this with furniture. But when I do these offers, I pay $167 a month, which over 6 months is $1,000. And then I own it in cash. That 27% interest never kicked in, and it was a good deal. So these can be great opportunities if you know what you're signing up for. Anytime you're signing up for a credit card, they legally have to put in big, boxed, bold, oversized text certain criteria: the interest rate, the late payment penalties. Scan through the agreement, find those texts that jump out at you, spend 30 seconds making sure you know what you're signing. You cannot pull your signature back once it's put down. All right, so who has learned something they did not know when you sat down to start? All right, we've talked about how to spend your money. Now we're going to talk about making money. This is at your job. Everyone's going to get paid as either a W-2 employee or a 1099 contractor. That's the name of the forms that the company sends you at the end of the year saying how much was paid to you from them. And it's what you use to file your tax returns. When you're an employee, you get benefits. You get offered insurance, you get offered retirement. Now, sometimes you pay all of it, sometimes the company pays all of it, sometimes it's a mix. That depends on what company you're working for. But they're available in some scenario. Your boss, the company, has to pay things that you never see. They have to pay unemployment taxes to both the state and federal levels. If you get laid off and file for unemployment, that check you end up getting is from these payments. This is where that cash comes from. They also have to pay workers' compensation insurance, which is if you get hurt on the job, that's what kicks in and makes payments. These cost your boss money, and unless you need it, you'll never see it. So an example, making $20 an hour, full-time job, your gross pay is $3,200 per month. Any of you who have worked a job, you know that's not what you get in your bank account because taxes have to be taken out. So Social Security, Medicare, and income tax withholding, these are all legally required to be taken out. The benefits, you're doing some retirement and you needed vision insurance. So your bank account gets $2,500. Those taxes and the benefits, everything that was withheld, the company's not keeping. They have to write that check to somebody else. But then the company also has to pay for the unemployment. They have to pay for the workers' comp insurance. And they pay part of your taxes. They put money in your Social Security. They put money in your Medicare account. So the company bank account goes down by $3,500. And here's where it goes, and that's what ends up in your account. There's $1,000 that the company pays that you never see. It is expensive for a company to have an employee. Other option is an independent contractor. This is what my husband does. He doesn't have a college degree. He's got technical certifications. He's got on-the-job training. He does computer and networking. There's no benefits. There's no unemployment. There's no workers' compensation. Somebody calls him, he goes, does the work, gives them a bill, they pay it, and he's done. Yes? Okay. So same $20 an hour. He gives the bill to the company for $3,200. They write that check, and they're done. This is cheaper for the company than that $3,500 they were paying for the employee. But what about the worker? All of the taxes are now on you. So you got $3,200, but you're having to pay the same taxes plus what the company paid for the W-2 worker. End of the day, at $3,200 gross, a 1099 worker will have less money with no benefits. This is why to do a certain job, the hourly rate that a contractor charges versus paying an employee, the contractor's hourly rate is higher so that their take home after taxes ends up closer to the same. Now, this is not a good, bad, evil, best. They're both valid scenarios. My household has one of each, but know the differences. If you get a W-2 employee job, the money you get is after taxes. You can spend all of it with whatever you need it to do. If you change to a 1099 job, no taxes have come out yet. You need to set some of that money aside, or when you file your tax return, you're going to get hit with a giant bill to the IRS that you can't pay because that cash is gone. The IRS is one of the only it is the only organization. They can levy your bank account. That means they can go to your bank account and grab money out of it without your permission. They can contact your employer and send them a letter saying you owe back taxes. Send me half of their paycheck until they've paid off their balance to the IRS. It's called garnishing your wages. You don't want to get behind with them. And I've seen it happen when people didn't understand this difference. Our tax system is what's called a progressive tax system. It means the more money you make, the higher the tax rate is. The first $19,000 of income, is that bottom color of sand. It's taxed at 10%. Once you make $19,001, that next dollar is a new color at a new tax rate. But it does not change that first level. If you win the Mega Millions jackpot, you will pay 10% on the first $19,000 of money. So many of you have probably heard on the news or from your parents talking about tax reform, tax benefits only are helping the top 10%, the wealthy don't pay their fair share. Any of that verbiage sounding familiar? Got a few sleepy fingers going up. All of this is available on the IRS website. It is free. It is public record. Anybody can get to it, including all of those reporters. They just choose not to. This is on a nationwide basis. The bottom 50% of income earners. How much of the national tax bill do you think they are paying? Just pick a number.
What percentage?
For the whole country.
For the whole country, the bottom 50% of money earners, how much of the national tax bill do you think they're paying?
1% is the number I heard.
15?
15.
All right. The top 1%.
The millionaires, the people with the most money.
How much of the tax bill do you think the top 1% is paying?
How much?
I heard a 30.
Anybody else?
Here we go.
You're pretty close. The top 1% is paying 37% of the bill.
Of the whole tax time. That's what they pay most.
The bottom 50% is only paying 3% of the bill. Now, part of that is because there are people in the bottom 50% that have a negative tax rate. They get more back in credits and incentives than they paid in for their taxes. They make money filing their tax return each year. So that's part of what drags this down so low. For a married couple together, both workers' incomes, if together they make more than $40,000 a year, you are above the 50% threshold. Your new teacher in Texas, which is a low-paying state, by herself makes more than $40,000 a year. The top 10%, who's paying 70% of the tax bill, is at $140,000 for two people. They're manager level, making $70,000 a year for a husband and a wife. They're the top 10%. Yeah. It depends. These numbers are from the married filing joint. So if there's two people on the return, but one of them's making $140,000 a year, it would still fall on the same threshold. But most households, you've got two people working. Now, there is some income disparity that is real. Because the top 1% has the people making the crazy psycho big money. They're in the top 1%, but they're making 19% of the income.
The total income for the country.
All the money made by all the people in the entire
But it's
United
weighted
States.
because so many of them are so high. But they're paying 37% of the bill. The top 10% are making less than half the money, but paying 70% of the bill. So when Congress does a tax benefit and the newscasters get on there and say, well, the top 10% are getting the majority of the benefit, that is a correct statement, but it's incomplete because they're the ones writing most of the checks to start with. This 3% of the bill, there's not much left to give them. The people already making money on their tax returns. There's nothing to give them. So when they make a change, it's going to benefit the people that are already writing the checks. Taxes are a mess. They're complicated. The main thing to be aware of, Texas does not have a state income tax. You go work a job, they take out federal taxes, and you get the rest. Other states, New Mexico, Oklahoma, Colorado, a bunch of others, have state-level income taxes. Some places have a city income tax and a county income tax. So if you're ever looking at moving outside of the area to work, see what the tax rates are where you're going to. Now, Texas has no state income tax, but we've got high sales tax, we have high property taxes. somewhere that has a state income tax, their sales tax is a lot lower. Their property taxes are lower because the state's getting their money from different places. So your cost of living could be a little better, but you've got less money to work with. And that's the end of my presentation. I hope it was helpful.
What was it about?
Speak up. All right, guys, we might have some people who may have some questions, so hang tight. We still got time in class.
Whenever you get your income tax, would it be a problem? Like saying no,
No, that's not a problem. Having extra money is never a problem. And I know some people that on their W-2s, when they fill out that new employee paperwork, they say to do 0 allowances, which means to maximize my income tax withholding. They're basically making a savings account at the IRS because they're paying in more than they have to.
And
Then when they do their
time,
tax return, they get a refund of that extra.
Would you rather get money back or would you rather pay them money? Now, would you rather get money back or would you rather pay them the money? I'd rather get it back.
Does it like how did you get to work where you are now? Like is it like stressful and like really hard?
Guys, keep it down.
To get to where I am now, to become a CPA, to be able to sit for that exam, you have to have 150 college credit hours. That's part of why I got my master's. I went to Texas Tech. They offer a program where you can get your bachelor's, master's, and the 150 hours all at the same time.
I wonder trying to work for like to like space. Like I heard that you have to get like a bachelor's.
Usually, you'd want to have at least a bachelor's degree in accounting. We've got people where I work that we've hired them when they were done with their bachelor's. They're going to UTB to get the rest of the classes so they can take the exam to get licensed. But in the meantime, they're working for us full time, taking 1 or 2 classes per semester. So it's certainly very doable to break it up into pieces, start working a little bit earlier if you need to. Okay.
Guys, class is not over yet. Go back over there. Go back over there. You don't need to be lining up yet. We still got 6 minutes of class. Go watch this. I'll let you ask questions up when I was. Yes.
That's more of an attorney question because it's a legal who's liable for the debt thing. If there's debt during a marriage, it is debt of both people. But if when she passed, if she doesn't have any money to pay it with, basically the people that money is owed to could go after her estate, what's left after her death, to get their money and to get them paid before her kids could inherit anything else. Is what I would expect the answer to be, but an attorney would be able to give you a better answer.
I was supposed to ask my dollars and cents, but
You're supposed to get your W-4s at the end of January.
W-2s.
April 15th. W-2s.